Okay, let's begin itself. Introduction with myself is my name is Kai Jun. So for those who are joining for the first time, um, I'm a second year student doing econs and finance. I have started investing for about 5 years or so through FA fundamental analysis. So I'm doing this sharing out of passion to hopefully share a little bit more regarding to financial literacy at the same time to learn from you guys. So trying to create I would say a positive community also. So little disclaimer is I'm not a financial advisor. So do take this topic or whatever sharing that is done throughout this webinar as education or entertainment purposes only. Yeah. So if you like to take further action, do seek your own consultant or advisor. At the same time, do your own due diligence research as well. So before we begin, the quote for today, I think is compound interest is the eighth wonder of the world. And why I say that is because it do really bring a exponential growth in terms of your monetary wealth, in terms of your savings as well. So without further ado, let's dive in. Before we actually begin on today's topic itself, what I really want to do is to share a little bit more about the drama of the world itself. So what has actually happened recently is what's going on between China and Hong Kong itself is the concern over the one country, two system framework, which have certain relation with the national security itself. Carrie Lam actually moved forward in terms of cooperation with Beijing, which will result in the current riot or protest that's ongoing in Hong Kong now. How does this actually affect us, Singapore itself, or how does it affect investor? I think there's two sides to the coin that we can look at. As investors, it's very volatile to invest into the Hong Kong market itself. There's a certain kind of uncertainty within there, which cause I would say insecurities. At the same time, in terms of looking at from the perspective of a Singapore point of view itself, is the assets allocation or the shift in assets could be partially benefiting to Singapore as investors around the world want to reallocate their assets from Hong Kong to Singapore itself. Second news would be the economy is slowly reopening around the world. Few notable ones such as Japan, Korea, as well as China itself. Measurements are in place. Business isn't back to norm, and a new norm, is to be embraced. I think similarly to what's going on in Singapore as well, given a phase one. So most similar to Singapore reopening in terms of phases wise, I think would be Australia. More of a similar approach as well. So if I won't say we should seek them as a comparison, but in general, statistics do tell as well as the behavior of the individual community. Lastly, Singapore is actually sinking deeper into recession based on the forecast this morning itself on the news from Straits Times, Business Times. If you all have a look at it, I'll refrain talking too much about this as I have talked about it regarding this current economy situation in the past webinar as well. However, feel free to ask at the end if let's say you have any questions, and we can discuss it during the Q&A itself. So how I actually got started into investing is a bit, I'll say, unorthodox. Is that I think this game is well known by many. It's RuneScape. It's an MMORPG game whereby you can go on adventures and train various skills. So within the game, there's this, I would say, this segment or this particular thing called the Grand Exchange itself, which works similarly or closely like the stock market, like the SGX itself. So you can trade goods. Yeah. So how I made money in the game itself back then was I buy low, sell high. Essentially, it's like flipping. Whereby I think you can see from the bottom, the middle picture is I buy some stuff for 6,000 coins and I sell it at 8K. So in terms of volume wise, if I made a profit of 2K times the amount of quantity, that's how I made my money back then when I was gaming. So how it works is like pretty similar to real life. It's like the market itself, given the supply and demand within this mini economy within the game itself. So now we bring it out to the outside world, and I'm not asking you guys to play this game, but I'm just saying that this is one of my inspiration out of the many that's out there, such as my books, like video and stuff like that. So this is one of it that actually spurred me into actually, if I can apply this real life, why not, and it'll be more fun. So the next thing is continuing with the previous webinar for this month itself. I think the first one was the mindset itself, followed by simply start, and last week itself is your first investment. So I'll be sharing a little deeper on for this week, I'll sharing a little bit deeper on how to spot various assets and securities basing on your portfolio goals. Things I'll be sharing today is what works for me and what I have learned throughout. And I'm grateful that I've actually met various investor, research on various bloggers, as well as YouTuber to actually, I would say, come up with thing. I would say incorporate certain tools that they have used and certain experience that they have shared to improve in terms of my research process. So do take this with a pinch of salt in a sense that do not fully quote what I do, but do your own research and look into what works best for you at the same time. So without ado, let's start. So many of us here are either working or studying or both. So time is our limit, is the only limitation that I think existing. Unless you're from Mars, then you have 24.5 hours. If not, you have 24. Fundamental analysis requires a lot of time in terms of the research portion. Buying a stock is very easy. It's just few buttons, few clicks away. So how do we streamline this process? And what I'm going to share with you, it should take you about 10 to 15 minutes. Of course, when you start off as a beginner, and how I did start off was, it did take a little bit longer, maybe 30 minutes to 1 hour. But once you get used to it, the process should shorten to between about 10 to 15 minutes or so. Okay, so I've actually streamlined the criteria to looking before spending a substantial amount of time in terms of researching the particular business or company you want to invest into. So the first one would be identify whether is it a growing market, is it a peak or an emerging market itself. So for example, is like Thailand, they are considered as an emerging market, whereas for Singapore, it's pretty stable as growth isn't as substantial compared to them itself in terms of GDP wise, GDP comparison. So within the market, what we are looking into, we can look into the sector itself. So do you understand? Do you understand the particular sector, which allows you to see into various opportunities? So for example, within a tech sector, you will then want to look into AI, for example, artificial intelligence, or you want to look into 5G network, which is one of the, I would say, revolutionized in terms of the networking infrastructure in the near future. So the second one will be strong pricing power itself. Do they have the competitive advantage? Are they leading within a sector? Is it like the leader in the industry, or are they a follower, or is there many competition? So that's something you have to understand. Then the third one would be a business you understand. As the word it is, do you understand what does this company do? Do you understand the business, or do you just invest based on rumors or like hot tips in a sense? So one very good example is, I think I shared many other times, is McDonald's itself, their business is real estate. Their byproduct is the fast food. Similarly to Starbucks, their business is a third-party space where their byproduct is the coffee itself, what they are selling. Apple, their business itself is lifestyle. Their byproduct is the electronic devices, your iPhone, your iPad, all this kind of thing. Last but not least, I think is the growth record itself. So basing on their growth itself, how long of a history do they have? And how does it look? Is it like very volatile, whereby there's a lot of fluctuation up and down kind of thing? Is there a lot of uncertainty? You're not sure what's the future outlook of this company? Or do they have a very strong and dedicated, I would say, laser-like focused vision kind of thing? So as well as you want to look into their strong history record in terms of their revenue stream as well. So I think financial health is also another key indicator. So these are the few criteria. I mean, these are the main 4 criteria I'll look into before I actually decided to, okay, it's time for me to research into this company. Does they, for example, if let's say I want to look into SIA, is it a growing market? Okay, I mean, it's debatable. Strong pricing power, I mean, it's the only one in Singapore that is, doing well and with a strong backing. But then a business that I understand, I definitely understand a business. But their growth record, given the current situation, what's their future outlook? So maybe I might not want to invest in the SIA. So that's one of the few thought processes that you can incorporate into before you actually start doing your research. So like I mentioned earlier, the beginning portion you might take a little bit longer, probably about 30 minutes or so to an hour. But once you get used to it, it should take between about 5 to 10 minutes. Sorry, 10 to 15 minutes or so. So now that after filtering the companies, you have passed the initial criteria, I will now be sharing 3 additional strategies to look deeper into the particular business itself. So this is what works for me. So if you have any question, feel free to ask, or if you have your own strategy that actually works for you, feel free to share with everyone else if it's okay with you. Yeah. So the first and foremost will be the management itself. How are they treating their employees? I think that's the top criteria that I'll always ask, is because if you do have a happy employee, the employee will treat their customer nicely. And if the customer is satisfied, you do get business. And if they are really happy, they might refer their business to someone else and you might have recurring revenue. So it's pretty simple. So I will want to look at how the company is being run itself. I think if you want to find out a little bit more about the particular company, you can look into like Glassdoor or the LinkedIn, like people feedbacks and everything, reviews. I think there's a lot of forums out there. So additionally to the platform, what you can look into is the mission, goal, and their statement from the management itself, listed. Listed within their corporate governance. All this can be found within the company website under investor relations itself. So a good culture will always result to increase in client utility as well as satisfaction, which I mentioned earlier. Which I would say increase the revenue stream within your business itself. So second would be the use of their cash flow. How are they fully utilizing the money? Are they holding on to the cash or reinvesting into them or redistributing them to investor? So understand the difference in the sector as well. Has a different management use. You need to understand that within different sector, there's a different use of funds as well. So for example, we know that REITs, they have to distribute actually 90% of, at least in Singapore, they have to actually distribute 90% of the income, whereas for others, they don't have to do so. I mean, that's one example you can look into. So try not to do cross-sector comparison, as it might not be as fair as it seems. Lastly, we are looking into management buying into their own company, and this is different from share buyback. What you want to look into is as the manager within the company itself or as an employee, you do see employees actually buying the company shares. This shows that they believe in the company, they believe in the outlook, the future of this company, that they will do well. The reason being is because if this company do well as a shareholder, they themselves, be it an employee or not, if the company do well, share price increase, they do earn profit as well. So yeah, it's more common sense or whatnot, but it does take time in terms of understanding this whole people management thing within the company. The second will be their financial statement. This is the financial strength in a sense. So what does the financial health look like? Do they have a high assets to liability ratio comparison? Are they equipped to last through the disruption if there is any in the near future? Any form of disruption. So, and during any particular disruption, for example, the current one, I won't say this is a market cycle downtrend, but I will say this is just an episode. I'll get to it if you want to know more during the Q&A. And during a particular disruption, are they able to to resist and actually strive way beyond in terms of the economy when economy goes back to the norm? So how are the business like? Are their business comprises of repetitive and a scalable model, or what we know as a economic mod or economy of scale? Lastly, regarding their financial ratios itself, like PE, PB, price to earning, price to book, price to cash flow, or return on equity, return on investment, within the sector itself, do a little comparison within from the sector average as well as their peer comparison, their rivals, their competitors. Questions, why are they higher or lower within the sector comparison, or why are they higher or lower compared to their peers or their competitors? So, but do take note that sometimes qualitative approach is qualitative approach is better than quantitative, right? So don't get too hang up over the numbers and the ratio. A company that have a good business model, good business structure might tend to be a little bit more expensive. It's like, I won't say Gucci or anything, but I would say if you understand this particular good, I would say a product that is really good and have a reputable, I would say success in a sense, they tend to be a little bit more expensive compared to a cheaper alternative product. Yeah. Last but not least would be the strong economic franchise. How is the business actually faring within the economy itself? Are they the monopoly, or is there a lot of competition within there? So, for example, is bubble tea itself. It's great for a consumer. From a consumer standpoint, it's great because there's a lot of there. They have to compete for the pricing in order to to produce certain kind of profit, which is the profit margin. But then from an investor standpoint of view, I won't want to invest into bubble tea itself. The reason being is simple. There is very minimal profit margin itself. There's too much competition out there. People are pricing as a lowest minimum to gain the minimum, at least a certain form of profit in a sense. So you have to ask yourself, is there limited competition? Is it a high barrier to entry kind of thing? That's something that you take into consideration. Lastly, always invest into a business whereby you understand them. If you don't, then move on. You have to understand investing in a company is similar to owning the company itself. So if you don't understand what's going on and how they are actually managing your money, and at the end of the day, if you're still okay with it, then I don't mind, you can put your money with me. So yeah. So what do you want to avoid? So I've actually shared with regards to the 3 in terms of the debt valuation, like what you want to look into, what you want to dive into, and really dig out all the information as much as possible to make sure that the the investment decision that you make is I would say suits your goal as well as your portfolio objective. So what you want to avoid is diversification. How much is enough? So many people say diversify. But then like really ask yourself how much enough? Do you have time to really diversify and understand all 15 companies, for example? So shared by Peter Lynch, mentor of Buffett, you know, he's a good number that he shared off is between 3 to 8 companies lah. So within your portfolio itself. Reason is that everyone has the same number of hours in a day. And I'm sure you're not going to spend, let's say you sleep 6 hours, I'm sure you're not going to spend 18 hours reading on stocks because that doesn't make sense. I don't do it. So time allocated, you know, to understand the company you own as well as, you know, keep updated on the recent activities, you're going to take a substantial amount of time. So you ask yourself how much time can you spare within the week itself. This is also on top of, you know, your studies, your career, as well as your leisure activities. You got social life and everything. So that takes into factor as well of consideration. You know, at the end of the day, do be confident, you know, with your research. Going against the crowd is fine, you know. It's not easy, but it's definitely worth it. I think one of the very good example is people always say buy low, sell high. So I think the initial dip, for example, this particular stock, SIA, right? There is this initial dip whereby it dropped, I think, all the way to about $6 or so, $6, $5. Then people say, oh my God, it's a value stock. But buying low, buying low cost, I would say the majority of investors want to put into money into them is because it's reputable first, and they believe there's a government backing, there's a second. But given the current situation, I think about a few weeks later, which what happened recently, they actually dropped to about $3 plus or so. So for those who are invested at $6, it might hurt their portfolio kind of thing. I'm not saying that it's a bad company, but I'm saying that as an investor, we really want to take into account and don't have to be afraid of missing out, you know, and not everything is buy low, sell high means it's a good thing. And this one very good concrete example. So be consistent and disciplined with your research and studies. You know, do not tweak just because, like I say, fear of missing out. Be really disciplined, like really believe in whatever you research into. If you think that, and I won't say gut lah, but if you really think that this company won't do well in the long run, then move on. If it's a red flag, move on already. Yeah. I have come to the end of the sharing for regards to the debt evaluation, and that's how I actually do it personally. If you've got a question, you can just put in the chat, then we can discuss it at the end. The cash flow statement is actually a continuation of what I've actually done for everyone that's here. It's one of the 3 financial statements. The other 2 is income and balance sheet, which I shared the 2 webinars back. I've actually covered about them. Yeah, so if you want to find out more or if you have a question, you can let me know in the Q&A later as well. So cash flow statement itself, actually, as simple as it is, it shows the inflow and outflow within the business. So cash flow statement is, I would say, split into 4 different segments. The first one will be operating activities, which is the measurement of the increase and decrease of assets and liabilities itself, like depreciation, appreciation, for example. Investing activities is the measurement of the earnings and expenditure, you know, on long-term assets such as equipment and facilities. So are they investing in the plant or machinery, for example? You know, for example, like a car factory. Financing activities actually cash flows between company and its owner and creditors, such as issuing of bonds, selling and buying back of stocks. Last but not least is net change in cash, which is the current cash position. Could be a positive and negative, depending on what's going on within the particular quarter or the particular year. Maybe if they spend a substantial amount of money in reinvesting into their company and they have to spend more, therefore it might reflect as a negative. So not all negative figures within the cash flow is bad. So do research into them, read up their financial report, financial statement, or annual report and find out more, like why is it negative. As for the last one, beyond the 4 segments itself, is actually free cash flow. Free cash flow is the amount of cash that the company can freely, you know, spend as it is. So if it's negative, it's a red flag. So that's the difference between net cash flow and free cash flow. It's a red flag if it's negative. And you will want to see, and as in from investor point of view, you will then want to see that the free cash flow is, I would say, growing in a sense. Doesn't have to be a sharp surge. Just have to have a steady and consistent growth. And I think that's fine with me. Yeah. Okay. Without further ado, I've actually come to the end of my sharing. For those who is joining for the first time, I've actually started my own YouTube channel. I have uploaded the first webinar up there. So for those who is joining for the first few time, y'all can go over and have a look. If y'all want to find out more or what I have talked about during the first webinar, y'all can do so lah. So do support. You can like, subscribe, and share with your friends. I'm advertising for myself now. My IG is there as well. My Instagram is there. Yeah. Then for the left hand side is the references that I get from, like the New York Times and stuff like that. Yeah. If not, we can actually proceed to Q&A. Yeah. Yeah. I have yet. I'm still in the midst of learning how to do up the editing of videos. So give me some time. I will try to do something about the editing. Cause right now I'm just uploading the pre-record webinar as a whole. Yeah. No problem. Okay, so if you all have no question, actually, I have been getting this answer. I've been getting this question pretty often. Is robo investment a good investment itself? My take is a good investment. Is still a form of investment. Is whereby they utilize robo, which is artificial intelligence, as well as actually actual fund manager to help you manage your portfolio in a sense. So I think the two most notable one in Singapore is Stashaway and Digi Portfolio, which are what I'm currently using. I think what you should understand about robo investment is compared to just investing into funds, I would say it's a downside. But if you really got no time to research, I think you can look into those. But even if you're looking into those, still do read up on maybe their fact sheet and stuff like that to really understand what are you investing into. Okay, so the next one is I want to talk about is, as I mentioned earlier, funds itself, there is management fee, correct? So when you invest into a particular company, you into your profits in a sense, instead of investing into a specific company that you think will do well in the long run. But robo investment, there is additional management fee for the robo managers. Do I make sense? It's like they have to the manager. Let's say for example, I put 1K. Okay, let's say for example, there is fund ABC. I put 1K into fund ABC. Management fee maybe 1%, correct? So I pay them $10 every per annum. Then profit whatsoever, then I'll take the rest, right? But then if let's say I use robo investment, this robo investment decided to the AI decided to I want to invest into fund ABC. So when you put $1,000 with the robo investment must pay that 1% to must pay 1% to the fund itself. Then on top of which, the robo manager will collect additional management fee from you, which is the 0.8% per annum fee for, I believe, Stashaway and 0.75% from Digi Portfolio. So there is, I would say, an invisible fee that you have to pay. And that's something that you take into consideration as well. For those who is asking about robo investment, because I get this question quite a number of times throughout the past webinar after the Q&A. Yeah. So without any more questions, I shall wait a bit. If you all have any questions, you all can think of questions, then we can answer and learn together. Does anyone have any questions? If not, we can conclude this sharing. Yeah, man, the RS reference. What do you think about future ETF? I personally, I don't look into futures. Yeah, because I believe most of the futures traders, and most of them are traders. They trade depending on the news and the current situation. What I'm doing is actually fundamental investing, whereas I look at the fundamental of the company and the macro outlook of the economy. So I look at both micro and macro economy, then whatever status the outlook it is, then I'll delve into the company itself. So I don't really look into future, so I have no comments on that. I'm sorry. Yes, sir. Good night. Okay, if not, actually we can conclude this sharing. If you all have any question, just feel free, to drop me a message also. Then I will answer them personally. I think many of you I mean don't have to feel shy or anything. There's many others that have actually reached out already. Yeah, I'm doing this out of passion. At the same time, through my sharing, I do get to learn from you guys as well. So do not hold back lah. Don't have to worry. Okay, I think I'll just thank you guys for your time. Rest well. I will come up with the list of topic for next week itself. Sorry, for next month. And I'll get back to you guys and I'll update accordingly on my Instagram itself. Thank you. Good night and rest well.